Hello, family. This is Migrant the Trader welcoming you back to another episode of the ongoing saga of what is going on with XRP. Now, I want to bring you back into this chart, back into the trenches, so we can take a look at what is going on. Here we go with what I was showing you on our last episode, trying to determine if XRP falls, where will it fall to? Now remember, we highlighted this area of confluence. This area of confluence whereby we saw we had a support level from previous time frame time frame, and now we saw our Fibonacci retracement retracement tool. In this case, I turned it upside down extension tool to see, based on this top wave, where might the coin fall to and find support and bounce if it continually falls. Now, what we're looking at here, we're looking at a classic three-wave correction. It has taken the first wave down after it went through a 1, 2, 3, 4, 5 wave extension. Now it's stopped. It's collecting and correcting itself as profits are being taken off the table. And now we're seeing a classic three-wave, or the beginning of a three-wave correction. It's already made the three waves. Now we're still in this third wave. That's not over yet. This is a daily candle. So this chart is showing the daily candles. Each candlestick represents one whole day of activity. We can go down to a lower time frame to take a look at what is being contained in this activity to see, are there any indications on the lower time frame that might show that it's preparing to reverse off of this level. Because you see, this white is falling down below this level of previous support. So it has broken support and now is just about ready to hit on this target of the 1.00 Fibonacci extension. So this is where we're looking at a potential bounce. It's been bouncing already, so it's already gotten some momentum to push down. As you see, it's really getting close. Right now, if I put my mouse on here and then look over in here, okay, when I put my mouse on this chart, on this candlestick, you can see the current price. This is the open, the high, the low, the close of the current bar that's highlighted with the candle. So now if you look at that, you can see we are currently at a price of $1.9276 on XRP. Woe to those who bought at the top of this move here. Now they are sitting at a train that has left the station, moving away from them, and they're looking at holding a loss right now. Some of those people are feeling the pain now, and many people, probably what you see when it bounced off of this, these were people who were cutting their losses. By cutting your losses, if you were to buy something, to reverse that, it would be a sell. Okay? So as you sell it, it adds to the pressure. And then people down here were buying because there's a lot of people camped out at this prices looking to get in at this price. Well, it has fallen below that price. So if it continually fall, where might it go? Well, we see now there's a very little small wick at the bottom of this candle, and it's sitting right there on this 1.00, $1.9029. So if we look at this and say, what is the low? The low is over here. See, if you look at this one right here, when I put it right here, the low for this candle for the day is $1.9215. So there's a little bit more room it can fall before it's sitting smack dab on this. Now, once again, I want to show you something. Do not take these numbers that tightly, because first off, you can see my little ring might not be exactly on the top of this candle, and so it's giving you a zone. It's close enough, but don't be held to the exact price. So right now we're for all points, of concern, we have reached this part right here. So the price could stop and start bouncing back up like we saw the first candle when it came down and touched our first spot, this horizontal support line. It bounced back up. Why? Because a lot of orders were executed. Now the question is, do we have a lot of orders sitting here? If not, if price continually falls through this, this is where it's going to get kind of interesting. Because if it falls through this, we have a couple areas where it might hit. You see where this candlestick here fell and bounced? It might go there and bounce. It might go to the bottom of this and bounce. It might go to the bottom of this and bounce. But the next real area from our Fibonacci extension is right down here, which happens to be another area of confluence. We have our Fibonacci extension tool identifying this price range, but we also have, from previous activity, price action, found this to be an area of support, which means the market remembers these, and now this could act as a magnet, pulling the price down to this. So if it continually falls through this area of support right here, then the next real area of concern will be this one. And if it breaks through this one, now we're going right back to where it was before all of this election rally started in November. We'll be right back down to 68 cents. So stay tuned, family. Stay tuned. What would I do in this case? If you're interested, you can put a little bit of money in on this at this price range. If it goes down a little bit further, you might, you see it start to bounce, you might want to get in. But remember, sometimes these bounces happen so fast that you could have lost 3 or 4% simply by waiting. So sometimes if you want to speculate that the price is going to bounce, because we know that this is a coin that a lot of people are gearing to load up this coin. So a lot of people want it to go on sale at a lower price. So the question is, how low will it go before the market really sweeps in and just sucks this thing up? Because there's a lot of people who saw 5X's on their money here, and now they're, now they cashed in, and now they have more money to play with. They have the house money now to play with, profits that they just earned, so they can come in and take another stab along the line. As this thing goes down, there's more money that can go in, and people believe that this coin is going up, way up into the future. So I wanted to bring you in today just to let you see how is the price unfolding in alignment with what we was projecting the other day on the last episode. So that's what I wanted to show you. So once again, I've given you identified. I still have my Fibonacci extension chart here. Now, what I could do, let me just do this real quick. We know we're looking at this top wave, and we're looking for this fifth wave to go to our 2.618 range. So this, ladies and gentlemen, is 68 cents. That is if we are looking at a full-fledged 5-wave correction down. If that's what we're looking at this time frame, the 5 waves very well could end up right back down here at this price range right here, which means all of this would be erased. And so if you didn't take profit, if you was in this and you didn't take profits off the table, you can see all of that profit evaporates back down as this thing falls. But a lot of us are sitting there saying, we're not going to get rid of what we have. We're going to keep holding, and we're looking to add to our positions. So we're looking for this price to go on sale so us to buy it. Now you can see where price is right now. It is sitting right on this line. As we are speaking, the price is falling. So right now the lowest price is sitting at the $1.9085. Our target price where we had is 19029, but once again, that is not cast in stone, because if I was to adjust this right here or adjust this, then it will change this price. So this lets us know it has reached this target point. But what's interesting is the price has not been violently rejected yet, which means potentially we got some more distance to fall because all of our orders were already triggered with the first time when it came down here and hit. So now, nothing to hold this. If there's nothing to hold this, then it could continually fall. And so keep your eyes and ears open to what's going on. Now, what I was going to do is if I was to take and to change this wave to be based on this little wave up to see whether this wave here, which is a wave, it is a, this is wave B, the middle wave of a three wave correction. So if I take it on that to see whether that have any further information on where this third wave is going to go, let's just do that before we end the discussion. So what I'll do is I'll keep this. I'll just take this and draw this over this way. Get this out of the way because we can even bring it back. The white line here, we put it at the top of this candle, which is the top of that wave, and then we'll be able to see, where we were. And once again, as you see, as I move it, that bottom white line, where's the 1.0, the prices can change based on you're putting it at the exact top. So now if I put it right there, we're back to where we were, 19029. So let's move this out the way. Let's take and do an extension off of this down wave right here. So I'm going to go back in, and in this case, I'm going to do a fib trend-based extension, and I'm going to start at the top of this wave and move down to the bottom of this wave and then draw it across. Okay? That way it shows me the extension as if this thing is going to start going down. Where would it go down based on this middle C wave? So let's line this up, put that in. And all of a sudden, what we are seeing is that this second wave, once again, is in alignment with the current wave. So this blue line is back in alignment with this horizontal line, which is where we were before. Okay? So this line right here is a key line that this first corrective wave and the second corrective wave is pointing to. So ladies and gentlemen, hold the phone, take note that if the price continues to fall, if the buyers don't sweep in and push this price back up, we very well may be looking at this area here being tested. You see where on the way up, it stopped and found some congestion here. Well, on the way down, it will find congestion there again because there was a lot of tug of war going on, and it was a very small, tight market, which means the buyers and the sellers were evenly matched until the buyers were able to break out, and then we saw that last 5-wave extension. So if price continually falls, this is highly likely, highly probable for it to get back down into this area. So for right now, we're talking $1.44 area. Not exactly $1.44, but somewhere in this range here, okay? Would be close enough. If it gets anywhere within this range here, we would have, for all intents and purposes, it would have hit this area. So keep that in mind. I'll keep this up just to see that, because we can bring this back online if we want to. But this right here, the last wave that was completed is this wave that we just drew it off of. It was a correction on the down wave. It was a correction on a correction wave. Okay, it was the middle wave of the 3-wave correction, which at the end of 3 waves, it could be the continuation of this longer term, because this 5 waves on a higher time frame could just be one wave. Remember that. The fractal nature of the market. At a higher time frame, this could be one whole wave. At a lower time frame, it could be 5 waves. So because we saw this could be a 1 wave up. And this could be 3 waves, 1 wave down. So this could be a, let's go like this, just put, This could be wave one. Go on here. So that's one wave on a large time frame. And now we could be building wave two, which is currently parked right here. Wave two could very well go down into here. And if it finds that and can bounce off of that, then we can take our Fibonacci extension off of this wave. Watch this. Take it off of this whole wave one here to get a projection on where price will take us. See, if we do that to this wave here and pull it across there, now we're looking at, let me get this locked in here. All right. Now let's see where prices are heading. If we do a 5 wave up from here, we're looking at $9 for XRP. So family, we got to be able to know how to look at these charts. Now what we're seeing here is on RSI, RSI has now falling out of the overbought region, which says now what we said before, usually when it falls below there, it likes to go at least to the 50 to 50. It's almost there right now. So let's keep that also in play, because if it falls to 50, dips below that and comes back up, then this corrective wave very well might be over, and then the market might continue its trend upwards from here. So right now we're building a 3 wave correction. Building a 3 wave correction in prices is bouncing. We're at 1966 now. So it's bounced a little bit from where it was. So keep everything under close scrutiny here. You can see this is how it looks at the bottom of this candle. You can see it reached down to that line and is bouncing up a bit now as our RSI is approaching 50 on what could be wave two, which is a down wave. And then wave three, once again, would be a projected wave that could go from here. If this is where it finds support, goes from here, and then it'll be upwards into the stratosphere somewhere. Okay? So that's what we're looking at, the potential of what we're building right now. But we also have this down, continual fall down, because we don't know if this turns into a selling frenzy. If the bottom falls out of this support, this could be a falling frenzy, and it could fall back to grace where it started from, back to down to the 60 some cents range. So we have both scenarios in play. We can't make the market do anything. So what we have to do, we dance with the market. We follow the market's lead. It takes two to tango, and somebody's going to have to lead. So the market is the lead. When you dance with the market, you dance with the market and let the market lead you. And you just follow as it leads you. And that's what I want you to see for today. So I'll leave it like that for now and bid you adieu. Until next time, ladies and gentlemen, I'll talk to you later. This is Migrant the Trader saying, until next time, be safe out here. The market is wild and very treacherous these days. Take care.